As you can see, we got, of course, the non-farm payrolls scheduled for release at 2:30 together with the unemployment rate. However, construction PMI will be released at 10:30 today from the UK. The market participants expect an slight increase from 50.7 to 51 points. But what about the main event of today, which is non-farm payrolls? The market participants expect that drop from 236,000 to 180,000, but the unemployment rate should increase from 3.5%, close to the record lows, to 3.6%. So slight tick up in the unemployment rate is expected. Another very important data, employment change from the Canada. This data will be released at 2:30 as well, and the market participants expect a decrease from roughly 35,000 to 20,000 jobs. So what do we have today? Non-farm payrolls. So we already know what to do in this day. We already know that the volatility might increase, so please stay focused. During the data release, it might get very, very dynamic, very, very violent during this data release. But let's now jump to the charts and let's focus on the technical analysis to see what kind of scenarios we can have for the non-farm payrolls. And we are starting with, of course, euro dollar. Euro dollar 4-hour chart, as you can see, is showing us some sort of the horizontal trading. The markets are still, the market is still moving slightly up, but it doesn't. It is not that dynamic. It's not aggressive movement to the upside. Our recent technical resistance located at 1.1096 has been challenged yesterday, but no avail, no breakout, no new high was made above this level, so it stays, the technical resistance stays at this level, so little bit lower than this level. We got another technical resistance, of course, the horizontal one, and the old one located at 1.1076. so this is the resistance that needs to be violated in order for market to rally towards the level of 111.85. That's the next target for the bulls. However, it looks like the market doesn't want to do this, and the market is right now kind of I don't want to say trendless, but it's hesitating what to do. Neither bulls, not bears, know where they should go next. So all of our previous technical supports are still intact. We are still trading around this the technical resistances, of course, around the 50 and 100 periods moving averages, and of course the technical supports are ready for our to our disposal, 1.0910 and of course 1.0943. Momentum whipsaw trading for the momentum is obvious. We go up, we go down, we go up, we go down. Everything is around the range of the neutral levels up to a level of 66 points. So as you can see, bulls doesn't know what they want to do. Bears doesn't know what they want to do. They are waiting for a trigger. What can be the fundamental trigger for the euro dollar to break to the upside is, of course, the non-farm payrolls data release that will surprise the market participants in a positive or in negative way, which is very important for the future of this horizontal, let's say, trend of the euro dollar. So please stay focused, stay very, very keep in the back of your mind that this is not a regular Friday. This is non-farm payrolls Friday, and the euro dollar might react very, very dynamically, especially that the recent volatility on this market is not really big, and it's definitely not directional one. So neither bulls nor bears, they don't know where they want to go. So the euro dollar might react quite violently. What is the other market that might react violently is, of course, US dollar index. So the US dollar index, let me just find it. The US dollar index 4-hour chart, well, this is clearly this is clear downtrend here, right? On the 4-hour chart, we have a series of the lower highs and the lower lows, the recent lower low, and our main technical support is 100.76. After this, we of course tried to rally. However, this is the 100 periods moving average, as you can see on the 4-hour chart. It prevents the bulls to rally. Even if there's a breakout, then the bearish revenge is severe and the market moves lower. So let's just dig in a little bit closer to the current situation of the US dollar index. As you can see, even this level here, 101.61, can be too much for bulls, because there is very nice bearish engulfing pattern, and there is definitely some show of the strength of the bears, right? So we got bounce to the level of 50 on the momentum, and then rejection. We got bounce from the lows, local lows, to the moving averages, rejection. So we should now observe this low here, the local low at 101.08, because that's the local low that can be violated, very close to this one as well, but it's close to the main technical support, 176. So it looks like on the US dollar index, ahead of the NFP payrolls, the market is being dominated by the bears, and they rule. So any positive surprise, or any basically surprise which is not right now already discounted by the market participants, might have severe consequences in the form of a very, very strong bounce, very, very strong rally on the US dollar index. So that's the situation on the US dollar index. The other market we should cover, and which is susceptible to the non-farm payrolls, is US dollar to the Japanese yen. And here we have a very, very interesting situation. We have a rejection of the level here, 137.78. So that's the technical resistance for sure. Bearish engulfing pattern, extension towards the technical supports provided by the moving average 50 periods, moving average 100 periods, and then another breakout lower. So where is the next technical support? It looks like we got one here, 133.03. That's the next technical support. There's plenty of the technical support, because the market has been trying to move higher, right? So the technical supports were abandoned to the downside. Okay, so we got, for example, this three technical supports for the market participants. So this is reversed V-shaped, right? So we usually have the V-shaped reversal from the downside, like the V. That's the reversed V failure. We cannot. We can say reversal, but I would say a failure, bullish failure to rally higher. So this is how it looks like on the 4-hour chart. Extremely oversold market conditions, total bearish dominance on this short-term time frame. Okay, let's just switch to the daily, because I would like to see what kind of a pattern, candlestick pattern was built after this reversed V-shape price action. And what do we have here on the daily time frame chart is Marubozu candle, and that's the dark cloud cover. And again, this is around that level here, and this is around the level of 100, of course, 37.92, which is the high from the 8th of the March. But as you can see here, we got again pin barish candle, and then confirmation, extension, and then another extension to the downside. And that's exactly the same situation that we have right now on the US dollar to the Japanese yen. Dark cloud cover, Marubozu as a confirmation, and then extension to the downside. So please be very, very careful trading this market. Please stay vigilant, stay focused, because it looks like this market doesn't want to be controlled by the bulls anymore, and all of the higher prices are being rejected. Short-term trend line breakout to the downside means that this market will extend the move towards the daily technical daily moving average 132.82, or even towards one of these technical supports, horizontal supports. So that's the US dollar to the Japanese yen. Let's go back to the 4-hour chart and let's switch to the gold market. As you can see, the gold market was rallying recently, a very nice rallying here towards this level. Of course, I need to put it on my chart. This is the technical resistance after the new all-time high was made at $2,080. Then we have a slight pullback, then we try to rally again, and just before a few hours before the NFPD payrolls release, we have a little bit of weakening of the rally to the upside. Where is the support? Where is the support? So basically, the support can be considered as a series of the lines here, and at least 3 of them will be necessary. That's the one, that's the second line, and the third technical support is somewhere here. So that's the zone of the technical support. You might call it even demand zone. As you can see, it's been tested before, and then immediate response to the upside was present. So please, any breakout below 2008, 2014 zone means that the drop to the downside will extend towards the level of 1971, which is the next valid technical support for the bulls. So the situation of the gold is kind of secure. It's kind of it looking better than the other markets. However, this is a very susceptible zone for the bulls. Please keep an eye on the zone. Any surprise from the NFP might result in a test of the zone or even a breakout. And then, of course, we will have the extension to the downside. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye-bye.